Hi, welcome to this video, which is all about Elliot wave and Fibonacci, the trading techniques and strategies that traders use to try and make profits in the Forex markets. Now, if you take Elliot wave and Fibonacci, they can be combined, obviously, or they can be used separately. But these two methods are probably two of the most popular, especially for beginners when they come in the Forex markets. And in this video, I just really want to outline the background to both strategies and basically just show you the real reality of why these strategies don't work. And I think if traders actually looked at the background to where Fibonacci and Elliott wave strategies come from, they would not use them. Okay, so let's take Fibonacci first of all. Named after Leonardo Fibonacci, the Fibonacci number sequence was devised back in 12th century Italy. Now, it wasn't devised for trading at all. He was a great mathematician. He wanted an equation which could prove exponential growth. And he set himself a task, which was, if you've got a pair of rabbits and they produce another pair of rabbits after the first month, and the previous pair produces another pair of rabbits the next month, the new pair produces more rabbits, you're obviously going to get an exponential growth of rabbits. And that was all he did. He set himself that task to prove exponential growth. So what has that got to do with Forex trading? Well, Forex traders have suddenly taken the numbers out of the sequence and say they're magical levels of support and resistance. And they put them on the charts and they hope the levels hold or break. I mean, there's no logic to this at all. Leonardo Fibonacci would probably be turning in his grave if you knew what his number sequence is used for today. So it's not really based on anything that is to do with Forex trading. Now, also, it makes the assumption that these numbers are scientific. Well, yeah, if they're scientific, they should work all the time. They only work some of the time. If you do it on your charts, you'll see, yeah, sure, prices bounce off a Fibonacci level sometimes, but how many times don't they? So there's no logic in using a scientific formula in a market which actually is not scientific. We're humans, yeah, we don't conform to science. Okay, so that's Fibonacci, undoubtedly a great mathematician, but the idea of using his number sequence and retracements in Forex trading is obviously doomed to failure. But let's take Elliott wave. Where does Elliott wave come from? Well, it comes from a guy called Nelson Elliot, and he basically wrote a book which he claimed, that his Elliott wave theory could basically, predict what was going to happen in the future. And he went even further. He wrote a book on how to predict everything in life. Now, in terms of Elliott wave, what is it? It's peaks and troughs. You're supposed to look for a peak and then it goes to a trough and you go up to another peak. But you actually have to, when you do it, decide where the peaks and troughs are going to begin and end. And everyone's going to see them differently. Now, again, if they're scientific, then they should work all the time. Also, the proof of the pudding is always in the eating, as the old saying goes. How much money did Elliot make with his theory? None. He died in poverty. And this was back in the 40s. But in the late 80s, I think it was Robert Prechter wrote a book called The Elliott Wave Theory, and basically became very, very popular. Now, Prechter and Elliott wave, they've been predicting a crash in the stock market for as long as I can remember. And of course, eventually they're going to be right. But you haven't seen really much of a retracement in the stock market. It's far higher now than it was back in the 80s, for example. So again, a predictive theory. And, it's one of these things that, Forex traders do not question the background to the Fibonacci number sequence and Elliott wave theory. If they did, they would actually see, why these theories don't work. And a lot of people watching this video may say, well, I see lots of brokers, touting Elliott wave and Fibonacci. Yeah, well, of course they do. They don't really care if you win or if you lose. And of course, there's lots of courses, systems, and strategies, and those sell in huge numbers. Why? Because it appeals to the easy money, make money easily, don't have to think about it, just use a scientific theory. Of course, in a market like Forex, you've got the majority losing, 90% of traders losing. And you do actually have to think, and you do actually have to make an effort to get a trading strategy with an edge. Now, you can do this, and it can be very simple, but it needs to be based upon the fact that Forex markets are based around probabilities, not certainties. So if you're considering using Elliott wave and Fibonacci, I would suggest you consider very carefully, and you can look them up on the net, the background of the theories, and you'll see that Fibonacci had nothing to do with Forex trading whatsoever. And Elliot actually died in poverty despite the fact that he could predict the future, or so he claimed. So thank you for watching this video. Take care. Have a good day.